Hey there fellow traders, welcome back to my channel where we discuss all things about finance and trading and help you navigate the exciting worlds of option trading. Today we are going to tackle a question that puzzles many. Who makes more money in option trading, the option buyer or the option seller? So let's dive right into it and find out. Before we start in option trading, it's important to understand the concept of zero-sum game. This means that the profit earned by one party comes at an expense of the loss incurred by another. The amount of profit is transferred from the losing party to the winning party, right? For option buyers, the potential for profit is unlimited, but the losses can be limited. That is, they can only lose the premium they paid if the market moves against their position. On the other hand, option seller have a potential for limited profit up to the premium they have received, but theoretically they carry the risk of unlimited losses, right? So who earns more in long run? It's important to note that in the long term, the probability of both buyers and sellers making money should be equal. If only buyer consistently made money, then there will be no seller in the market and vice versa, right? From my experience, I have observed that option sellers tend to make profit more frequently, but in smaller amount. On the other hand, option buyer may experience fewer wins, but has the potential to make larger profit when they do succeed. Let me give you an example. An option seller might earn smaller profit, say rupees 100 for five different trades. Meanwhile, an option buyer can make up to rupees 500 from single winning trade. Ultimately, the amount of profit earned by both parties tends to even out over time. So choosing whether to be an option buyer and option seller depends on your risk appetite. If you prefer the possibility of making significant profit from a single trade, buying option might be the way to go. However, if you're okay with smaller frequent profits, selling option could be a better fit for you. Many option buyers aim for those big profits but often end up losing the premium when their market moves against their direction. They might experience a series of losses and get demotivated, potentially exiting the market just before a winning trade occurs. Option seller, however, have an advantage of time decay. As the time passes, the value of option tends to decrease. This means that sellers can hold their position and profit from small gains more frequently. And as we all know, market is sideways majority of the time. It is also true that option sellers can potentially profit in various market scenarios, including when the market moves in their directions slightly against their positions, or even when it's in the sideways market. This flexibility is indeed one of the advantages of being an option seller. Nevertheless, it's crucial for option traders to maintain strict stop losses orders to protect themselves from substantial losses if the market makes a sudden or a significant move against the position. So to sum it up, there is no definitive answer to whether you should be an option buyer or an option seller. Talking about my preferences, I am a algo trader preferring option selling, taking a non-directional view in the market. It depends on your risk profile and the number of trades you want to execute. Both approaches offer unique advantages and risks, so it's essential to choose a strategy that aligns with your trading goal. Hope you like this video. If you do like this video, consider subscribing and see you in the next video.